Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
So it's been a little bit of a bloodbath. We're back at that feeling, you know? Remember the feeling?
The smell of napalm in the morning?
Yeah. I guess the last time we felt this, although this isn't as aggressive, was maybe in April around that tariff tantrum when...
Oh, there was Octenth as well.
Well, that's true, but that was like so fat. That was a different type of bloodbath feeling.
This feels a little
squishy.
bit more. Yeah.
You've been bearish on, near-term bearish on Bitcoin price for several weeks now.
Yeah.
I think even, to be honest, even before October 10th. But I've also publicly now reduced my end of year target. I think I had 185 is what I published a year ago for the end of this year. And now I'm saying 120 is the bullish near-term target. Even that, I think options markets are saying 22% chance likely of 120 by the end of the year and an equal likelihood of 92 at the end of the year. What's your take on the,
I'm in the 90 camp, or the risks being more skewed towards us going lower. Taking a step back, I think kind of what frames my view about Bitcoin is, it does tend to follow pretty strong, like, technical timelines, right? Like the 4.5-year cycle or 4-year cycle. And I think there are a lot of believers in that, particularly folks that have been in crypto for a very long time.
Yat, coming up the next interview, he says exactly this too, that the 4-year cycle does kind of still exist because there's still a lot of people that believe in it.
There's a ton of people that believe in it. And, I think in terms of like what we've seen by tracking on-chain data, flows here internally is, there is a lot of significant whale selling that it has been happening in the market over the past couple of months. And, it's intensified over the past couple of weeks. And so, there's that high-level framework of there's a lot of whales selling because they believe in the 4-year cycle stuff. And then when you kind of think about the events of October 10th, right, like that liquidated a ton of traders, right, on the long side.
Really like sophisticated retail.
Sophisticated retail, a lot of market makers, a lot of hedge funds. There are rumors of hedge funds that literally got wiped to zero.
We haven't
on Twitter.
seen those bodies float up yet, though. Really, right?
I hear rumors every day.
Yeah, but not like on.
Correct.
No one's formally closing their fund or anything that we've heard yet.
We've heard, and so what happens when you have such a deleveraging event is that liquidity goes down in the marketplace, which means that for every dollar of buys or sells, price moves a lot more, right? And that makes the market susceptible to like very large moves. And when the vol of an asset goes up, right, in theory, if you're running a portfolio, you have to hold less of it. Yeah. If the liquidity profile goes down, you have to hold less of it, right, just mechanically. And so you're in a market that's now thin from a liquidity standpoint. And then there's also like a wealth effect from the fact that the alts have gotten absolutely murdered.
Yeah, I think
there's a bunch of alts that are down 50, 60, 70% on the year.
70 out of the top 100 coins, including Bitcoin and Ether, the top ones, 70 out of 100 are down 50% or more from their all-time highs at this moment. It's crazy.
Crazy.
I mean, that's a bloodbath out there.
Bloodbath. And for people to re-enter the market, people need hope.
And they need time to
reset. Correct. But where is that hope come from? It typically comes from a catalyst. Now, do I see any catalysts coming on the horizon for Bitcoin? Unless the U.S. government starts buying Bitcoin, I don't really see a positive catalyst for crypto in general.
In the near term.
The near term.
Yeah.
Right? So there's nothing for people to really latch onto in the near term.
I think that's right. And one of the other points I was making was like, there's been a lot of other good investments this year. Like last year, or at the end of last year and in January, long Bitcoin was like the hottest trade in the world. It wasn't the hottest trade, it turns out, for the rest of the year. You had AI, gold, you could buy the gold.
A ton of other things.
Right? Like it's not that it's not good. It's
Chinese equities, robotics companies, quantum computing.
Yeah, it's not the nuclear stuff was doing well.
Bitcoin at this scale has to compete for attention. Right, with the other asset classes. And right now seems more like magic internet money than like a prudent investment. Not, that's a little
at this
harsh.
moment. At this moment, though, to you. Well, you're calling, not calling for. You're and you said you're in the camp of more of a 90K bottom, and then
I think the path of least resistance is lower. I think it'd be foolish to put like meaningful targets into place, but I think if you break 100K in a meaningful way, a daily close below, a weekly close below, that definitely suggests lower levels ahead. And your kind of next support areas are kind of like 95-ish, 94.
Yeah, 95 is like a kind of a key level. I talked about this with James Check on this show, where something like more than half of the network, people don't realize this, more than half of the Bitcoin supply now was purchased or last moved on chain, but the heuristic we use, at prices 95K or higher. So that is sort of in a way of saying, like, that's kind of where the bulls should defend, because below that, most of the network will technically be underwater in terms of their entry prices, using those on-chain heuristics. So it's a key level.
It's a super key level. And, what I'd like to remind folks is that markets are reflexive in both directions, right? And so there was a beautiful flywheel earlier this year when DATs were really popular, where, a company could, sell stock at a premium to the underlying assets. The underlying asset would go up in value, and people would bid the relevant DAT because the underlying went up. And so there's this virtuous cycle that led to more Bitcoin buying. And now what you've seen is, the complete opposite, where, prices are going lower, and so MNAVs are going lower.
So they can buy less.
Or none, right? In theory, or even potentially sell, depending on who you are.
Some of them we've seen already.
Right, and so that flywheel has started to go the other direction.
I think I tweeted that I'm having intense deja vu, because I think you've explained this both as it relates to DATs, sort of a cautionary thing, though, several months ago, but also we've talked about the reflexivity flywheel and granted, I
Absolutely.
guess at this point we've been doing this show together for like 3.5 years, so
there's not much we haven't covered.
Through a lot. I think I tweeted once, remember that flywheels can become die wheels.
Yeah,
it was the exact thing you're
like
saying,
doom cycles.
Yeah, I don't think it's quite as doomer as that, but you're right.
I agree, but to folks that have been in crypto, like, I remember doing this podcast with you at Bitcoin 16, 17, 18, 19, 20,000, right? And we were bullish then, right? If you're an investor that has caught the ride from 20,000 to 100 in a large liquid asset class, you 5x your money, like, there's going to be some profit taking. Right? And, I literally looked at 6 charts today of like equity market valuations, and everything was in the top right. And so there's a lot of just optimism that has been brought forward, whether it's related to AI, whether it's related to crypto. And so your risk reward doesn't feel great. And I think markets generally trade towards max pain, right? Stocks climb a wall of worry. When crypto's flying, like, it stops people out of the craziest things at the worst levels possible. Funding is in your face. And now where I see max pain is really lower, because I think there's a significant mismatch between sentiment and positioning. There's a lot of folks that over the past couple of weeks have not felt great about crypto, but
they haven't delevered.
I mean, just take your average person that checks their account once they get home at like 5:30 in the afternoon. Like, you haven't even really had time to react.
Yeah, you're saying where's the price that gets that person to capitulate, and that's where you want to be a buyer, basically.
Correct.
As well.
And I mean, ETH it moved down 12%. In a straight line during the U.S. session that's meant to be liquid.
Right.
What healthy asset does that?
Yeah.
Right. And I just keep thinking back, I don't know, 4 months ago, 5 months ago, we were at 1,500 in ETH.
In April.
And people are like,
Right. I think the sentiment. So we're recording this on remember the 5th of November, Wednesday, November 5th. Tuesday, November 4th, yesterday, was that sort of really a bloody day in crypto. Equity markets and stuff were squishy too. But, I mean, this was the minus 12, 13% day for ETH that you were talking about. Bitcoin got to what, like 98.9, 99?
Yeah, around 99.
99?
Yeah.
And this is sort of
Herman Cain would have loved that. 999. Sorry.
It didn't feel quite – it felt like at 100, if you're selling 100, you're either getting your money back or taking – say, you know what, it could go lower. I'm going to take that. I wrote it from 20. I'm going to take the 5-bagger now. but it didn't quite feel like the pain. It didn't feel like
It doesn't feel like
I
Max
feel like
Payne.
we're looking for to be a healthy bottom. It needs to search lower, and so you're looking for like a wick. And I mean, I'm more in the 95 camp because I said about this sort of like line the bulls want to hold, but it feels like that it was angry and it didn't feel good yesterday, but it wasn't quite the like fear that, although that characterizes a strong bottom formation. That being said, that crypto fear index is like very low, very much on the fear side.
No.
But is that the right way to think about it? Like, it didn't quite feel like blood in the streets.
It's
time
not
to buy
blood
property
in the,
yet.
It's not blood in the streets. You're still talking about Bitcoin above 100.
Yeah,
like we're at 103.5. Like that's not bloody. Bloody is, where's MicroStrategy's average purchase price?
75 or
75,000.
Yeah.
That's bloody.
I don't think it gets that far, but it's the fear that it could.
The fear that
starts
it could
to be
is
the blood
enough.
in the streets.
I think people really need to widen their like range of expectations, right? Like we're talking about in the next 6 to 9 months, a year. Like where could Bitcoin get to, right? Plus or minus 25,000 from here is not crazy,
Right?
So like, that. How much does Bitcoin move on average year? Implied vol is like 40. Like, it's totally feasible.
Yeah, you're right.
That you get down to 75. And in fact, like, I would argue that, like, if you dip below 90, like, a lot of people are going to be like, oh, shit, is this...
No, I totally agree.
Could that be like a capitulation moment? It's possible. But I don't think that happens in, like, the next couple of weeks. I just think that 2026 is going to be very volatile, and you'll have vol in both directions. But I think folks should really widen out, what their expectations are.
Be prepared.
Be prepared.
Yeah.
If you're a believer in the long run, like
you should
like
welcome
we are,
an opportunity.
Right? I'm putting stink bids in the marketplace just in case it gets down there, right? And just be prepared with like cash on the sideline.
I like that.
And then if you are concerned, right, and you want to maintain your position, you don't want to take a taxable event, whatever it may be, like having some protection structures might make sense. Or, you sell a little bit of upside volatility to finance some downside hedges, right? So there are things to do. I think high level, the simplest thing to do for most folks is to buy and hold.
Yeah.
But there are times where, like reducing your position and improving your average entry makes sense. And I think you're still kind of in that ballpark, particularly if you get a nice little rally back to 110. I think, maybe then you might want to take some chips off the table. But yeah, there's a whole host of reasons to still be concerned about crypto.
Yes. All right. Let's talk about macro real quick here
because
we did have some squishiness in equities. There was a story I think I sent you on Monday that everyone had seen. It was on the top front page of Bloomberg, so everybody with a terminal had seen this about
the 10%
correction from Wall Street CEOs. Like they wouldn't be surprised; it would be healthy, right? And I think they're thinking something similar. Like you kind of got to go down to go up sometimes because we're stretched, right? So you got to give people a better entry that will make them want to allocate capital. But also you've got, I believe, the oral arguments for the Supreme Court case on the tariffs are today. Now we won't. I guess we'll get some tea leaf reading based on the questions that the justices ask. I think Treasury Secretary Scott Bessent is supposedly going to be there in the room, which is kind of fun. But you've got the tariff question with China, and then what else do we have? And by the way, did they resolve the tariff thing? It seems.
Yeah, I mean, you get headlines every day, like
China
they've got some kind of loosened the rare earth metal stuff.
Right.
They also loosened like companies, like the companies that were on the.
So it's
like,
either part of a deal
list.
or it's good faith to establish a deal.
Yeah, like it's and the tariffs aren't going up. The fentanyl tariff, extra tariff dropped by 10%.
Yeah.
Like
so some positive movement in the tariff.
Yeah, everything's going in the right direction. I think the government reopening is probably the next big. Positive catalyst
today,
for the market.
It's the longest government shutdown in U.S. government history.
And like what's happening is, there's a lot of money in the Treasury General account that will go out the door, pretty quickly, right when the government opens, and that should generally be supportive of risk. So you've got that. But back to your original question, like a lot of these CEOs calling for a 10% correction.
Yeah.
Like I think that is totally appropriate. Maybe not 10%, maybe it's 5%. But there are pockets of the equity market that are just so overinflated that, it's like, take some of the quantum computing stocks, for example. If you talk to any of the quantum computing experts and the CEOs themselves, they will tell you that they are like 7 years from revenue.
Best case scenario.
Best case scenario. And yet these companies are trading at, like, I think a couple of them were above $10 billion
Right.
for things that don't make any money in the equity world. And I understand for crypto people, that's like, par for the course.
No, even it's like the Russ Hanneman thing in Silicon Valley. Revenue? No, my God, no revenue, right?
Correct,
But
correct.
still 7 years out is best case scenario.
And I think that's,
Well, it may not.
It could
a lot
be 10.
of a lot of people think quantum may not even ever be possible.
Yeah.
But anyway, right.
And so like there's just a lot of like pockets that, I think to your average investor is like very concerning, but ultimately, like, you need a catalyst for things to actually, break down, and like nobody seems to care about valuation. So you could just climb the wall of worry into year end. The seasonals are super strong. Corporate buybacks are, in full effect. The big tech companies have had their earnings. And every day there's a new AI deal that people are hyping up and talking about. But, what I would remind folks is, when you get concerned, like, having no position is a trade. Right? You don't always have to be long. Like, being flat is a perfectly acceptable trade. And I get it. I'm
gonna need you to like record this. I'm gonna have to wake up every day and tell myself this, because you're right. People tend to think that long, short are the only options.
No, but flat is an equally appropriate option. And when folks are feeling uncomfortable about crypto or about equities, like, moving to the sidelines is perfectly fine. And if, most likely what happens is, on average, like, stuff goes back up and you feel much more comfortable buying back in. And on average, if you bought the S&P at any all-time high this year, you would have made money.
Right.
So it's not like crazy to just wait and see.
Yeah.
And that's kind of where I'm at in kind of my view of the world right now. Wait and see.
There you go. Beimnet Abebe from Galaxy Trading. As always, thank you so much.
Thank you.